Good afternoon, investors. You are now on KleverStock with me, Madhaveshwari, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Kicking it off with the Bursa Malaysia updates, Bursa Malaysia reopened on Thursday with a display of renewed vigor following the Chinese New Year break as the benchmark FBM KLCI climbed 6.82 points to reach 1,748.08 at the opening bell. This positive momentum was largely driven by stabilization in technology stocks as previous anxieties regarding the disruptive impact of artificial intelligence began to dissipate among the local investors. The market also drew support from a resilient overnight performance on Wall Street, which followed the release of US Federal Reserve minutes showing a committee divided on the future of interest rates. According to Apex Research, this division suggests a potential for further rate cuts if inflation cools, though a sense of lingering inflation uncertainty remains a central point of caution for global policymakers. The banking sector emerged as a primary catalyst for the index's upward movement, with all major players reporting early gains. AmBank, CIMB and Maybank saw their share prices rise as investors positioned themselves ahead of the critical corporate earnings results schedule for the remainder of the month. Other blue-chip gainers included Hong Leong Bank, which jumped 14 cent to 24 ringgit 10 cent, and RHB, which added 6 cent to 8 ringgit 14 cent. Healthcare and plantation counters also participated in the rally, with IHH Healthcare and PPB gaining 10 cent and 12 cent respectively. Despite the optimistic start, analysts expect the FBM KLCI to remain range-bound between the 1,735 and 1,750 levels as the market balances strong domestic indicators against ongoing global uncertainties such as the potential burden of the new US tariffs. Moving on to our local currency and foreign exchange, the Malaysian ringgit showed slight weakness against the US dollar at the start of Thursday's trading session, largely influenced by a more aggressive tone from the US Federal Reserve. Following the release of the latest FOMC minutes, which revealed that some policymakers are open to further interest rates hikes if inflation persists, the US dollar index climbed 0.5% to 97.712 points. Consequently, this ringgit opened at 3.8965 or 3.9160, slightly lower than Monday's closing range. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid explained that the Fed's two-sided description of future policy creates a potential upward path for the rates, which naturally bolsters the greenback. However, he remains optimistic about the ringgit stability, noting that the ringgit is expected to linger around 3 ringgit 89 cent to 3 ringgit 91 cent today, given the strong data points for the Malaysian economy. Despite the dollar's dominance, the ringgit demonstrated broad strength across other currency pairs. It also gained significantly against the Japanese yen, euro and British pound at the opening. Regionally, the local note also outpaced most of the ASEAN counterparts, appreciating against the Singapore dollar, Thai baht and Indonesian rupiah. This resilience is supported by Malaysia's internal economic health, specifically the revised Q4 2025 GDP growth of 6.3%, which significantly surpassed initial estimates. This robust performance provides a buffer against external volatility, as analysts suggest the country's solid fundamentals includes a burgeoning data center sector and strong AI-related electronics exports will continue to underpin the currency's value throughout 2026. Now for some local economic news, artificial intelligence is rapidly reshaping the global repayments landscape, with Malaysian corporate treasurers emerging as the most enthusiastic adopters in the Asia-Pacific region. According to the HSBC Redefining Treasury Asia-Pacific Voices of Treasury Report 2025, 44% of Malaysia treasurers already consider AI highly effective for managing global payments. This digital shift is enabling businesses to move beyond a simple transaction processing toward more sophisticated liquidity forecasting and foreign exchange optimization. Anand Mukhati, HSBC Malaysia Head of Global Payment Solutions, emphasizes that AI is no longer just a futuristic concept, but a practical tool for routing payments and deriving actionable business insights. He suggests that the next evolutionary step for the country involves merging this technical innovation with stringent data governance. By doing so, Malaysian corporates can transform standard payment data into high-level intelligence that directly informs strategic decision-making. The push for AI integration comes at a time when a global economic uncertainty has become a permanent fixture. Malaysian business deeply integrated into international semiconductor and electronic supply chains and notably sensitive to geopolitical shifts and trade fluctuations. As a result, there is a heightened demand among local treasurers for real-time treasury solutions that offer predictably and protect capital amid volatile market cycles. Looking towards 2026, the industry is focused on cultivating agility to respond to rapid changes in tariffs, sanctions, and capital controls. While enthusiasm is high, the HSBC report notes that full adoption faces hurdles such as fragmented data connectivity and varying levels of technological maturity. Treasurers remain cautious, balancing the urge for innovation with the need of mitigate the cybersecurity risk and ensure clear accountability to senior management. Continuing with more economic news updates. Economists expect Bank Negara Malaysia to adopt a more bullish growth outlook for 2026 in its upcoming annual report 2025, following an economic performance that significantly outpaced official projections last year. Malaysia's economy expanded by 5.2% in 2025, surpassing the government's initial target of 4.0% to 4.8%. This momentum has already prompted several major research houses to revise their own forecasts upward, citing robust domestic consumption and a resilient labor market as key pillars of stability. Dr. Muhammad Idam Muhammad Razak of University Technology Mara noted that while central banks typically adjust outlooks when growth consistently seeks assumption, BNM is likely to maintain a measured tone to balance optimism with external risk. He explained, by maintaining a measured outlook while monitoring incoming data, Bank Negara reinforces confidence that monetary policy decisions remain grounded in medium-term fundamentals rather than short-term momentum. This cautious approach helps insulate the market from volatility related to global trade dynamics and shifting financial conditions. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid echoed this sentiment, suggesting that the central bank's tone may shift from the cautiousness seen during the height of US-led tariff concerns last year. He pointed out that policy measures, including last year's overnight policy rate cut, have successfully strengthened aggregated demand, while the full impact of international trade tensions remains a factor. The internal economic engine appears strong enough to sustain growth throughout the first half of 2026. Market analysts have already begun adjusting their figures to reflect this reality. Hong Leong Investment Bank raised its 2026 GDP forecast to 4.7%, while Kananga Investment Bank suggests growth could approach 5.0% if current trends hold. These revisions are underpinned by a surge in the services sector, which grew 6.3% in the final year quarter of 2025, fueled by tourism spending and government cash assistance program. As Malaysia enters 2026, the focus remains on whether this domestic strength can offset the normalization of global demand and ongoing trade uncertainties. We'll now take a short break, but don't go away. We will return shortly with corporate and news updates developments. Welcome back to the Midday Roundup. Let's continue with some corporate news updates. Lotte Chemical Titan Holding Berhad is currently facing an existential liquidity crisis, with its operational runway potentially shortening to less than a year. Following a massive 1.1 billion ringgit loss over the first 9 months of 2025, the manufacturer is projected to lose an additional 400 million ringgit to 500 million ringgit in the final quarter of the year. This would mark a devastating 15-quarter streak of negative earnings driven by global petrochemical oversupply from China and the Middle East that has disseminated the company's pricing power. The internal financial situation has reached a critical stage as BIMB research warns that the company's 1.2 billion ringgit cash reserve is being consumed by a relentlessly monthly burn rate of up to 140 million ringgit. At this velocity, LCT may have only 2 to 3 quarters of liquidity remaining before its cupboard runs bare. The crisis is further worsened by a perfect storm of external pressure. A strong Malaysian ringgit that erodes export margins, that stubbornly low utilization rates as global demand for plastics and resins remains soft. Prospects for a rescue are increasingly uncertain as market observers caution that the South Korean parent company Lotte Chemical Corp may not intervene to provide further capital. With this capital base thinning and high-level talks of supply rationalization in Northeast Asia yielding little relief, LCT's path to recovery is narrowing. The combination of structural industry challenges and a rapidly depleting financial buffer suggests that the company is approaching a decisive moment regarding its long-term solvency. Up next, we have some business updates. The Employees Provident Fund has significantly ramped up its investment in Sunway Berhad, accumulating 44.15 million ringgit shares between January and early February 2026. This aggressive buying spree follows Sunway's 11 billion ringgit conditional takeover bid for IGM Corp Berhad, which was officially launched on January 12. As of February 11, the retirement fund stake in Sunway has climbed to 9.54%, valued at approximately 3.65 billion ringgit, making it the conglomerate's third largest institutional shareholder. Simultaneously, the EPF has strengthened its position in the target company, IGM Corp, raising its shareholding from 18.43% to 20.48%. This move comes despite a divided outlook from market analysts, which firms like Hong Leong Investment Bank recommend accepting the bid due to strategic synergies. Others like Kananga Research argue that the 3 ringgit 15 cent offer price undervalues IGM's significant infrastructure assets. The takeover remains conditional on Sunway securing more than 50% ownership, with a final decision deadline for shareholders set for April 6, 2026. However, the manager is unfolding under a cloud of legal scrutiny. For the EPF, the primary challenge remains balancing the immediate strategic benefits of the merger against long-term dividend yields and the potential dilution of its influence over critical national infrastructure held by IGM. Finally, wrapping up, we have major corporate developments and deals across Malaysia. Energy sector growth MISC Berhad has confirmed that its joint venture entity successfully secured a contract extension for the FEPS Ruby 2 vessel located offshore in Vietnam. The floating production unit is now slated to remain in operation until December 31, 2027, ensuring continued revenue stability for the group's offshore segment. As for the healthcare procurement, the Malaysia's government has accepted a 65.1 million ringgit tender from Duo Pharma Biotech Berhad and Biocon Sdn Berhad. Under this agreement, the companies will supply essential medical products to the Ministry of Health, strengthening the local pharmaceutical supply chain through 2026. Strategic de-risking Steel Incorporated Berhad is transferring control of its 31.5-acre reclamation project in Penang to a subsidiary of GSD Land, Sundarian Berhad. The company stated the decision was made to reduce financial risk and funding pressure associated with the project's lengthy development cycle. Moving on with the corporate clarification, Hextech Capital Berhad has publicly distanced itself from a business entity named Opcom Sundarian Berhad, mentioned in a recent anti-corruption report. The company clarified that it holds no relation to the entity in question, despite its own historical name changes. Legal disputes. High-Tech Paru Berhad is facing a legal challenge in the Shah Alam High Court. The firm has been sued by Kayangan Cahaya Sundarian Berhad for approximately 5.1 million ringgit regarding a building maintenance services agreement and related works. Moving on with the property and hospitality moves, IGB Berhad and South Keys City Sundarian Berhad have agreed to 3-month extension for their 215 million ringgit land purchase in Johor Bahru. Simultaneously, Johan Holdings Berhad is moving to sell the Orient Star Limit Hotel and 3 land parcels in Perak to Golden Peak Hospitality for 47.4 million ringgit. Operational update following a fire at its broiler farm in Linggil, Negeri Sembilan on February 14. Famiara Berhad assured stakeholders that the incident is not expected to have a material impact on its overall business operations or financial standing. Well, that's a wrap for Midday Roundup with me, Madhuveshwari, on KleverStock. Thank you for choosing us, investors. Stay tuned for our upcoming live stream programs.